Good evening, students, again. Yesterday we have discussed some of the basic concepts of the accounting. I hope you remember we started from the concept of the business, that what is the business. So what is the business? It is just any legal activity. The purpose is what? To earn the profit. Then we have discussed about the accounting, the concept of the accounting, that why we need the accounting. We need the accounting to know the financial position of the business, that what is the profit or the loss, how much we have to receive, how much we have to pay. To start the business, we have the basic requirement that is called as the capital. So what is capital? Capital is the investment in the business by owner, also called as an equity. So any amount that is invested in the business by the owner, that is called the capital. So the second thing that is important is the liability. So sometimes the owner has less money, he or she needs some outside source or the help. So for that purpose, they need the liability. Liability is what? It is payable by the business to the outsider. The outsider can be a bank, a friend, a family, so or even the goods on the credit. The third thing that we have discussed yesterday, that was related to the assets. Now, asset is what? Is the combination of the capital, what we have invested by the owner, and then what he or she has from the outside in the form of the loan. So if we combine these two things, that is called the asset. And asset, basically this is called as the accounting equation, like a capital of the business plus the liability of the business. So if we combine these two things, that is called the asset of the business. So from now onward, we will discuss the different concepts of the business after the assets. The first thing that is needed in the business is what? That is the concept of the goods, or even it is called as the purchases. Now, goods or the purchases mean words. For example, if the business we are starting is the trading business. I hope you remember the concept of the trading business. When they purchase the goods and they sell the goods, this is the simple trading business. So goods or purchases is what? Anything that is purchased to sell. So the business is purchasing something. For example, there is a small shop is there, they are purchasing some grocery, or there is some like a car dealer, they are buying some cars. There may be some bookshop, they are purchasing the books. So all these things will be considered as the purchases, or they are called the goods. Now, the next thing that is important is called what? Is the sales, or what we call as the revenue. Now, this is the main source of the business. The business is for what? To earn the profit. So from where they are getting the profit? They are selling goods or they are selling services. So from the selling of the goods or services, what the business is getting is called the sales, or it is called as the revenue. For example, they have purchased some goods here, so that will be called as the purchases. Goods means anything they are purchasing to sell, not the goods that they are purchasing for the use. They are different. For example, a business is purchasing like a furniture, that will not be considered as the goods or the like a purchases, because it is not for the resale purpose. They are purchasing it for the use in the office or in the some other shop. But if they are purchasing, for example, like a bookshop, they are purchasing some books, so that will be considered the purchases. Now, if they are selling the books, they are getting some revenue, means they are selling the goods, or even like some banks or insurance company, they are getting some services, and for that purpose, they are getting some amount from the customers. So from the sale, they are getting a selling goods, or it may be services, so from the customers. So from the customers, they are receiving the sales or they are receiving the revenue. The next thing that we are discussing is the concept of the expenses. So if you remember, for selling the goods or the services, it is called as the revenue. So the company or the business, what they are doing, they are selling the goods or they are selling the services. Obviously, to sell the goods or the services, what they have to do, they have to pay something. So that amount what they are paying is called as the expenses. So simply we can say, what is the expenses? Amount paid to earn revenue. So for earning the revenue, what they need the expenses. So what may be the different expenses? For example, they have to pay the rent. We started that if there's a bookshop is there, so for the bookshop they have to pay the rent. They have to pay what? They have to pay the salary. The salary of the worker, it may be a cleaner, it may be a shopkeeper, or the person for the loading or the unloading. They need the person, so they will pay a salary to them. Then, for example, they have to pay the advertisement. Obviously, for the shop, for the business, they have to pay the advertisement. They need some board, they need some pamphlets. So for all these things, they have to pay. And the major expenses what they have is the concept of the utilities expenses. Utilities expenses means what? It may be a electricity, it may be a fuel, it may be a gas, it may be a water, it may be a telephone, or it may be even the internet. So all these expenses, for what? The purpose of expenses is what? That they want to earn the revenue. If they want to earn the revenue, they have to pay something, so that will be the expenses. Now, there is a small difference between the expenses and the cost. So, our bookshop, what we purchased the books. And obviously, books are not free, so they have to buy it. So, when they are buying these goods, it will be considered as the books or it will be considered as the purchases. So, for that, it will be a cost. And these are the expenses. So there is a small difference between the cost and the expenses, or what we call it as the expenditure. So what is the major difference is that? Major difference, the goods what they are buying to sell, so the amount which they are paying for that, it is called as the cost. But other than that goods, there are so many other expenses which they have to pay, like a rent, insurance, salary, advertisement, it may be any other expenses. So all these will be considered as utilities, all will be considered as the expenses. So today we have discussed main two things. First of all, the concept of the goods or the purchases. The second thing we have discussed about the sales or the revenue, and the third thing is the expenses. So the main three concepts are there. Anything what you're buying, what you're purchasing, and the purpose is what? Not the use. The purpose is to sell. The second thing is the revenue. Anything you are purchasing, you are selling it to the customer, or what you are earning from the customer. So that will be called as the sales or the revenue. And the third thing is what? That is the expenses. The amount the business is paying for what? To earn the revenue, to earn the sales, that will be called as the expenses. So these are the main three things: the goods, sales, and the expenses what we discussed today. I hope you have understood the concept, and if there is any confusion, if there is any doubt, you can ask me in the